It's another time to do business. We have 55 minutes this time around here on Business Incorporated, and here's what we have prepared for you. We are awaiting Nigeria's inflation for the month of September. Financial derivatives are expected to drop to about 19%. Ghana is set to sign a zero-tariff deal with China by the end of October. Egypt seeks to increase its crude production, and so they're investing about $6 billion in oil exploration. You're welcome to the program. I'm Ini John Mekwa. We start as usual from the global oil space, where prices edged lower on Wednesday as investors weighed the International Energy Agency's prediction of a supply surplus in 2026 and trade tensions between the United States and China that could curtail demand. So look at the numbers for this afternoon. 21-cent drop for Brent. That's about 0.3%, bringing the price to $62.18. WTI is also down 0.2%. The price is about $58.57 a barrel. Both contracts closed at 5-month lows in the previous trading session. The International Energy Agency has said that global oil markets could face a surplus next year of up to 4 million barrels every day, more than its earlier forecast, as OPEC Plus and other producers raise output and demand remains sluggish. The trade dispute also between the United States and China, two of the world's biggest economy and oil consumers, that's reignited over the last week, with both countries imposing additional port fees on ships carrying cargo between them. And this will raise trading costs and disrupt freight flows, likely to lower economic output. In the metal space, gold notched a fresh record high above 4,100, heading to 4,200. And that happened today, lifted by expectations of a rate cut this month by the United States Federal Reserve and a flight to safety after flare-up in the trade tensions between those two big countries, Washington and Beijing. So look at the numbers for this afternoon. $4,126.47 a barrel, an ounce. That is for spot gold. For U.S. gold, it's 0.2% in the green, bringing the price to $4,142.60 per ounce. And spot silver is almost 3% in the green, $50.81. Platinum is, however, on the flip side, 1.5% down, as well as palladium, but this is 0.7% in the red, leaving the price at $1,464.42. The metal will surge 5%, 57% this year already. We've seen gold hit various levels of record highs. Of course, the latest being 4,100, heading to 4,200. That makes it a total of about 57% surge that it has hit in this year, 2025. Its rally has been driven by multiple factors: the geopolitical uncertainties, expectations of U.S. rate cuts, strong central bank buying. That is also a major driver of gold at this time. We've seen central bankers hedging with gold, and so that has increased the demand for it. And then we move over to Ghana, where it is looking at reaching an agreement with China in principle to grant zero-tariff access to Ghanaian goods into the Chinese market, with a formal signing expected to take place by the end of this month, October. The deal, announced by the President, John Dramani Mahama, was done during the Presidential Investment Forum in Beijing, and it will allow a wide range of Ghanaian exports to enter the Chinese market duty-free, significantly lowering costs and expanding access for Ghanaian producers. According to the Ghana Investment Promotion Center, the zero-tariff deal will also complement ongoing investment reforms aimed at positioning Ghana as a gateway to West Africa for Chinese investors. Let's remember that China also has this agreement with Nigeria. That's the zero tariff for exports. And then in Zimbabwe, the Trade Promotion Agency, Zimtrade, they've set their sights on achieving a 10% year-on-year growth in export. And it's part of its roadmap toward hitting a $14 billion US dollar export target by 2030. Speaking on the sidelines of Zimtrade's buyer seminar, which is happening in Harare, Operations Director Similo Nkala revealed that the plan and highlights that recent gains and strategic interventions to support the exporters. Well, Zimtrade is pushing for reforms to make export business easier, engaging policymakers to reduce non-tariff barriers, streamline trade procedures, and improve the business environment in that country. Egypt's government has unveiled a major investment plan around $5.7 US to $6 billion, and that's to breathe in new life into its oil sector, they say. The initiative is aimed to reverse declining production trends, reduce reliance on energy imports, and reassert the country's status as a regional energy hub. Egypt plans to drill 480 exploratory wells over the next 5 years, with 101 wells slated for drilling in 2026. The government expects to reduce energy import bills, improve self-sufficiency, and stabilize fuel supplies for industry, transport, and electricity generation. The plan is also intended to attract more foreign direct investment, modernize infrastructure, use advanced exploration technologies, and rehabilitate or enhance mature fields. And now let's see what the market looks like at this time. Before we get there, let's talk a little bit about trade, and what data can do or should be doing with that. We have joining us for this segment, we have the Senior Vice President of Sales at Web, and that's Ludovic Tani joins us. Mr. Ludovic, good afternoon and welcome to the program.
Good day, Ms. Thompson, and thank you for having me on your program. It's really a privilege. Thank you.
Yeah, good to have you. So we have a lot of conversations going on with, intra-African trade and all of that. But then we need to work with data. I mean, they say that's the new crude for the world. But when you look at the continent, the availability and sourcing of data, where are we exactly? Are we moving? Are we progressing? Are we anywhere close to where we should be?
You see, when we talk about data, at the heart of data is harmonization. So if you look at Africa as a continent, we have 54 countries, we have more than 2,000 languages. But for data, you need one. For you to be able to use data in all different countries and be able to trade using the same set of information, you need to have a unified way of sharing of data. And for that, a lot of progress has been made. But in order to reach our objectives, you would need to have more than that. You would need to have API integrations. You would need all different countries to be using the same global data models, for example, meaning that when data is being shared, it's not only about the data that is being shared, it's about the quality of the data that is being shared. It means, how am I getting the data and how am I sharing the data? Are all countries that are trading together doing the same thing, collecting the same way, sharing the same way? If that is the case, then data can be assessed. Then you can go back to data and you can analyze it, you can compare it, you can come up with statistics. If that is not done, then things will take longer. If you are able, for example, to discuss using one harmonized language, which is normally for customs. We call that the harmonized system. The harmonized system is a way that goods are classified. And that's a common language. When you adopt this, everywhere you go around the world, they will be using the same classification. So you're talking you're taking the same language. You're using the same set of information. And that, we have made a lot of progress in Africa, but the road ahead is quite challenging.
Yeah, so do you see or hear talks around strategies to bridge this gap that could help us harmonize this common language that we need?
Well, gaps would be in terms of infrastructure. In order for you to be able to do that, you will need to have the right infrastructure. You will need to have the right people. So capacity building is important. When you look at Africa, we don't lack talent. We have all the talents that we need internally. What we lack is organization of these talents. How do you train them? How do you ensure that they are able to do what is required from them? And that is a question of organization. So for me, the challenges are not that big, and the gaps are not incommensurable. The gaps are there, but we can overcome it. We can overcome it by working together and by understanding that Africa does not need external talents. What Africa needs is to organize its own talents.
So really interesting, and the world says that the future of the world is in Africa, you know, the young talents that we have, among other things. And you said it there, what we need is within us, you know, on the continent. And then we have platforms such as the AFCFTA. But I wonder if you see enough progress, enough collaboration, enough understanding of the fact that we don't need external forces, you know, to bring us together, you know, among the African countries. Because, for instance, it's more expensive to travel between some African countries than traveling outside the African countries.
You see, Africans are the only one that can solve the problem in Africa. And for that to happen is an understanding of the complexity of trade. You were talking about the AFCFTA. For example, in the AFCFTA, one of the most difficult parts is understanding the rules of origin, meaning that each product comes somewhere, and you need to identify where they come from. So you need a certificate to identify this. This certificate is not the same in all the countries. So how do you share this certificate? You need to use data. You need to use technology. You need, then after doing that, you need to unravel the spaghetti ball of regulations of rules of origin. And there's only one way to do that. And the way is not external to Africa. The way is technology. Technology that Africa can develop by themselves with the help of companies that do that. Our companies are not here to give Africa a product ready-made. We're here to sit down, understand the ecosystem, and develop something that will work for the country. So it is context-specific. What we need data scientists, we need Africans who are software engineers who can train the context-specific instruments. That's what we need.
Yeah, but how do we go from competition? Because Nigeria, for instance, yes, you have talents, you know, who can build this technology. You go to Kenya, you have the same thing. How do we come to a place where the continent and the people on the continent go beyond competing with one another to actually leveraging comparative advantage? Because I guess that will help us to grow faster.
Well, I will take the question from a different perspective. Why do we see competition as a negative thing? Competing does not mean that you are fighting against each other. I think competition is good. Competition is healthy. When we have countries in Africa competing against each other, it means that they want to do better. And that's a good thing. That's what will drive innovation. What will drive innovation is the fact that we are a little bit behind, but we want to be better, not because we our neighbor. We want to be better because this country is motivating us to go further than that. So for me, we should look at competition as a healthy thing. We are private sector companies. We are not the only one doing what we are doing. But We are happy to be with other competitors. We learn from them. They learn from us. And we keep improving. If we see that they come up with something more interesting that we have, then we develop something more interesting that they have. And this is good for the people. So this benefits the population, the citizens.
I must say that's an interesting perspective. We actually do need the competition because it pushes you to get better. Thank you. I think I've learned that. I did think of it from that perspective. Thank you so much for bringing that to perspective. Senior Vice President Sales at Web for Tani is Ludovic Tani. Thank you so much for your time.
You're welcome.
All right, let's head to the markets now and see what the numbers are looking for. Nigeria, it's positive at intraday. Remember that we did start off this day at 147,000 level, which is what we closed at. But at intraday, the market is up to 148,000 level, and the drivers are Zenith Bank, UBA, WAPCO. While on the flip side, we have decliners, Jay's Bank, ICO. Insurance, yesterday we saw insurance stock, even though the market was not, so active at the close of trade, but we did see positive activities around insurance. Today it seems it's on the other side, profit taking happening on insurance. LLX is also on the profit taking side this afternoon. Maybe the tide will change before the close of trade. So that's for Nigeria. For Johannesburg, they recovered from yesterday's losses very well. They've gone all the way from 110,000 level to 112,000 level at intraday, and that's more than 1% in the green. Well, congratulations to investors there. They must be smiling now. In Egypt, it's negative at intraday, 0.14% in the red, 37,408.54 for Johannesburg. At the close of Tuesday's number, they closed in the negative. We move over to the Middle East. See, Dubai is positive, Abu Dhabi is positive, Saudi Arabia positive, as well as Qatar. The Middle East is in a good mood. Investors there that is spending spree. They're spending a lot of money and putting it in the stock market. So we see that the major stocks are experiencing cherry picking. We move to the United States, where we see there a bit of recovery, not total, because of course the tension with China and the talks of new tariffs and port fees being increased, those are still in the horizon. So it's just the Dow Jones we see beginning. This is the features the day in the green, while S&P and NASDAQ, however, are in the red. But let's get more details of Tuesday's trade with our correspondent in Washington, Maria Bird.
The U.S. stock market was mixed on Tuesday as the Dow Jones was up at 0.4%, the S&P 500 was down at 0.2%, and the heavy-tech NASDAQ took a major hit of 0.8% down, as many investors are watching the escalating tension between the U.S. and China, as there appears to be a trade war that is looming, as many are hopeful that this will not have a major impact on the U.S. economy, as there is much expectation and hope that there will be some sort of an agreement between Washington and Beijing in the near future.
That's right, Maria. The talks and the hope, for that compromise and agreement between Beijing and Washington is still on. But looking at the markets, we see that it does look like Asia has looked somewhere else for buffer. We know that soybeans is at the heart of their latest tension that's between the U.S. and China. So China has refused to get soybeans from the U.S. And of course, U.S. is saying, I believe they called it an economically hostile act. That's what President Trump called it, that they're refusing to buy that. And of course, sentiment is moving. So it looks like China is looking for alternative. And so there's a bit of recovery compared to the U.S. market. So we see the Nikkei in the green, really green, 1.76, Kospi 2.68. And remember that China dealt with or decided to be hostile to a South Korean company that deals with the U.S. So yesterday we saw that really impact market sentiment in South Korea. But today, there's a huge recovery from that, 2.68. Hang Seng is also green, 1.84. Doesn't look like the Asian market is, connecting to the U.S. market at all at this time. The Nifty also we see is green, as well as the Shanghai. So the Asian market has recovered at the close of trade today. I don't know how long it will last, but of course we are still looking forward to that talk that's supposed to happen between President Trump and President Xi Jinping in South Korea concerning that. And staying with the market, let's head to Europe now. We have Lars joining us to tell us how markets in Europe are doing at intraday. Here, Lars, good afternoon. What's going on with investors at intraday?
Yeah, good afternoon, Ini. You know, what can I tell you? We just heard it from Maria about the U.S. stocks, and you just mentioned it for Asian stocks. And it's pretty much the same story here, of course, with everybody having a close eye on these most recent U.S.-China trade troubles. And then staying with Europe, watching the U.S. Fed Chief Powell, of course, his latest comments here on a weaker labor market, where investors are thinking, well, that might force them again to lower interest rates once or maybe even twice more this year. So that seems to be good news for markets. So in general, we're seeing the DAX up, albeit very, very slightly, just by about 0.1%. We have London up about the same. So really not much going on. Only in Paris, we see a whole different story playing out. The CAC 40 in France up way over 2%, almost 2.5%. And that is due to some real strength in luxury brands, with Louis Vuitton, Hennessy up 12%, and it's 7% up for Hermes and Kering, which is the company behind Gucci, Yves Saint Laurent, and Balenciaga. All that after it seems that the luxury sector there in France is showing some unexpectedly strong revenue numbers.
Yeah, and away from the markets, companies in the EU, they've been complaining about over-regulation or issue of too much bureaucracy. And I learned a committee has been set up and all of that. What's going on with this?
Yeah, you know, it's an old story, but they're doing something about it. The EU Commission's Committee on Legal Affairs is out with some recommendations on that supply chain law that we've often discussed, and they come pretty close to what the corporate community has been asking for. Now, to explain what we're talking about, the EU's supply chain law is an important piece of legislation in many ways. It is in place to make sure that companies keep their supply chains clean by, for example, not allowing the suppliers to employ child labor or use slavery or generally have unsafe and inhumane working conditions. Also by forcing their suppliers to adhere to certain environmental standards, clean air, clean water and such. So all this is, of course, very important. But the EU had so far planned on very strict rules on documenting those supply chains, rules that were almost cost prohibitive, especially for small and medium-sized companies. Many of them had said that they would have to set up an entire new department often to tackle this job. Definitely a competitive disadvantage. Now the EU Legal Commission says that only companies of more than 5,000 employees and with revenues of more than 1.5 billion euros have actually to document their supply chain in detail for now. For Germany, that means it's only about 120 companies that have to abide by these very strict rules instead of the almost 3,000 that had originally been targeted.
Yeah, does this sound like it's going to make everybody happy?
No, of course not. Well, here's the thing, Ini. The business community is happy, of course. Like I said, they have been asking for these changes for a while, and it's often run under that banner of too much regulation, too much bureaucracy. But of course, you know, there is a downside too. The regulation, tight as it was supposed to protect the poorest in the world. It was supposed to protect those who might be victims of slavery, forced labor, child labor. Now, of course, these forms of supply chain work are still not allowed and not even wanted by any company out there. But if there are fewer controls, or if fewer companies have to document that they are doing a rigorous job checking out the details of their supply chains, the higher the chance is that those that are at fault won't be found out. And that is something that some NGOs are pointing out. The interest of the poorest has now been somewhat weakened to support the industry. However, of course, driven by economic needs. After all, the EU needs to be competitive with other international markets. Driven by those needs, the Commission didn't really have much of a choice than to at least loosen its regulations a bit.
All right, Lars, thank you so much for giving us that update.
Thank you, Ini.
So let's see what's happening in the crypto space. And we see that Bitcoin has, I mean, the movement around Bitcoin these days is really funny. So today, I think yesterday we had about 117,000 level, but today, this afternoon, we have 111,000, well, close to 112. There's been an increase. That means it was worse than this at some point. So now it's up 0.69%. Ethereum is back on the $4,000 level, $4,000 level. So congratulations, gained 3.67% in about 24 hours. The color has actually, the color on the board is better today than yesterday. So we see it more of green: XRP, Cardano, XRM, Solana, all in the green. But let's see, I think the biggest story today from the crypto space is that seizure by the US government, where they seized about $15 billion worth of Bitcoin connected to what they've called the largest cryptocurrency fraud and human trafficking operations ever uncovered. Federal prosecutors in Brooklyn charged Chen Xing, also known as Vincent, is the founder and chairman of Cambodia's Prince Holding Group, with wire fraud conspiracy and money laundering conspiracy. And if convicted, Mr. Chen faces up to 40 years in prison, but stays in the record as the biggest so far, $15 billion worth of Bitcoin that has been seized. And stablecoins, which seems to be steadily winning the heart of many in different countries, the transaction soared to an all-time high of $15.6 trillion in the third quarter of 2025, driven largely by automated trading activity. About 71% of transfers came from BOTs, while retail transactions under $250 also hit new highs, showing growing adoption among small users. And I did mention earlier that even Nigeria is part of the small users. Total stablecoin market cap has surpassed $300 billion. And finally, Coinbase is investing in Indian crypto exchange CoinDCX. They're investing about $2.45 billion into that platform. And they say this move follows an earlier Coinbase Ventures participation in 2022, where they raised a capital of 2.15 valuation, with CoinDCX now generating roughly $141 million in annualized revenue. That's it on the program today. Thank you so much for being a part of Business Incorporated today. Also, the midweek edition. We'll have another one coming tomorrow. It'll be a fresh edition. It'll start from 10 a.m. with Business Morning. We'll keep you abreast of all that's happening in the world of business that's important to you. That's what we do right here. So let's start again tomorrow, 10 a.m. I'm Mini John Mekwa. Do take care.